All right, welcome back to another episode of me sticking my nose into these charts every single day until I discover a trade model that makes me millions of dollars. And a little bit of background, I started trading ICT over 2 months now, over 2 months ago. Dropped supply and demand, found out the truth. This is the market, this is how the market books, and now I'm trying to discover a trade model that makes me millions and millions of dollars. And recently, what I've been doing is everything that ICT has outlined in the 2024 mentorship. He's laying out a process for his son to follow, and I'm doing everything that he tells me to do. I'm doing exactly that, nothing else. And so, what I'm working on is my observations. So, first, before you even begin demo trading, you have to understand how the market moves. You have to read price action. You have to understand how to read price action. You have to learn how to read price action. How do you do that? You do that without even taking any demo trades, because the second you start pushing buttons, the second you start taking trades, is the second you get emotions involved. You add emotions to the equation. Then you're not worried about reading the candlesticks. Then you're not worried about reading what is price telling me. You're worried about, am I going to win on this trade? Am I going to lose on this trade? So eliminating all the emotions out of the equation. This is all I'm doing right now, just recording my observations of hypothetical trade scenarios that I would take if I was in the demo environment. So the whole point of this is to develop a baseline for my skill set and how well I am able to read price action. So my whole goal for this is to, where is it? Daily statistical progression right here. So my whole goal is to equalize the number of observations I get right and wrong. I'm not even pushing any buttons, but I can see that I'm statistically improving by looking at these data points right here. See, if I get more right than wrong, then obviously I'm doing something right, right? But if I get more wrong than right, then obviously I have some work to do. So right away, this is Tuesday of my second week doing this, and the amount is equal. So the grind that I'm putting in every single day is showing. The results are showing, and they're showing very, very fast. We are, what, 3 weeks into the mentorship? Or I think this is the fourth week, I'm not sure. But, anyways, this is all I do every single day, all day. And the results are really, really showing, and my ability to read price action is growing exponentially each and every day, especially since I'm sitting down and journaling every fluctuation of price. I'm journaling every candle that I see on the 1 minute time frame, just about every candle. Except times where I get it wrong, then I just get frustrated and then I just give up. So that's a big character flaw that I need to overcome, because that is going to be a huge barrier to my success if I don't overcome that and develop a coping method for that. So today, I'm talking kind of fast because I got to keep this one short. It's already 7:30. I would like to be in bed at 8 so I can get 8 hours of sleep. And I've been working since 6 in the morning. It's now almost 8 p.m. at night, and this is what I do all day, every day. Currently, my daily routine right now looks like I wake up at 4. I'm at the gym at 4:20. I work out from 4:30 to around 5:30. I get back home at 5:40. 5:40, 6 o'clock. I do a little bit of journaling, little meditation to talk to myself and visualize my future, remind myself of my goals and what I do and why I do it. Then at 6 o'clock, that's when the New York morning session starts at 7 o'clock New York Eastern Standard Time. So I'll begin studying price action. I'll do that from 7 to the start of the New York lunch hour, which is 11:30 a.m. So I'll read price action from 6 o'clock to 10:30 my time. 10:30 I eat lunch. After lunch, I'll go back and review my session. Uh, I'll do all this, record all these data points, look back at my thought process throughout the session, study the observations that I made. Why were they right? Why were they wrong? What was the indication that I would play out? What is the indication that I wouldn't play out? Here's a little sneak peek of that. See, why was this correct? Indication it would play out. Hypothetical stop and entry. I know my handwriting is shit, but it doesn't matter because I can read it, and that's all that matters. So there's that. And I'm just tracking these data points. So I'm building a baseline for my trade model without even having to push any buttons. So I think this is genius. And also, know this: everything is a positive. Anything not done right is an opportunity for you to dig into it, to learn more, and become better because of it. So I'm just plastering this all over my database to remind myself that no matter if I get an observation right or wrong, and in the future, if I take a winning trade or a losing trade, everything is a positive. Every outcome is a positive. And if you think that way, it's going to change your trading entirely. So this is the mindset that I'm trying to develop, trying to build this mental model. If I look at everything as a positive, there's no way that I can lose. So with all that being said, I said that pretty fast. I'm going to go into the observations that I recorded today and some confusion that I felt today and a character flaw that I have that I need to correct. So the first observation that I noted was at 7:17 in the morning, and the second one at 7:45. So let me go and outline the logic behind that. So right away, when I open the chart for today's session, am I lost? Okay, no, I'm not. When I open the chart for today's session, this is what caught my attention. So I can see that the market has traded through, done some damage, running the buy side liquidity above the previous session's lunch high, done some damage here, and I can see a market structure shift and a change in the state of delivery on a 15-minute time frame. So going into the start of the New York morning session, the order flow is clearly bearish. And if I look below the marketplace, what do I see? All these relative equal lows. You have all these relative equal lows near the previous day low. So previous day low is already a strong draw on liquidity in itself, and we have all these relative equal lows. So it's very probable that the market might want to reach into and disrupt all of these long positions. As you can see, going into the New York morning session, predominantly most of the money has been made on the long side of the market. So longs are in the crosshairs. They want to wipe the slate clean, take out all these profitable positions, punish those who are trying to bottom pick yesterday's low potentially, and just take all of them out. And that's exactly what it does. So when price was trading somewhere around here, here's the start of 7 o'clock, I think we could be drawing towards these lows. And I look on the S&P 500 and I can clearly see that there's a cracking correlation at the previous day lunch high. So that is significant. And I'm thinking, this is why I got confused going into the 9:30 equities open. I was thinking in terms of, daily profile, and I thought the high of the day was already in. I was pretty set on thinking that the London session had formed the high of the day, because usually we see the high or low of the day form the London session. So that caused a bit of confusion. I didn't really know what to look for come 9:30, especially with this huge, well, what I think is huge, because I'm not really used to reading price action this way, but there was an over 100 handle run that I actually ended up catching before the 9:30 equities open. So I saw this huge run and I'm thinking, okay, now I want to study what does price do after it makes this large run right before the bell. Is the price action going to be sloppy? Is it going to be clean? I don't know. I've never really experienced that before trading this kind of way. I mean, all of this is just entirely new to me. So I was thinking the high day was put in the London session. I was going to look for retracement higher into this area right here. I know it's a bit noisy, but I have to have all these lines on my chart because I'm a novice and I'm learning, and I need to be mindful of these points that the algorithm is referring back to. So this was a key point of interest for me for the potential retracement to get short on, to then go target and disrupt all of these relative equal lows down here. And you can see that this drop down lower comes just shy of this low, right? But it doesn't take it out. So what is that doing? That's priming that low. That is engineering more sell side liquidity, because it comes just shy of this low and then turns away. So anybody who's long off of this low, they get a sigh of relief. They're like, oh, we're safe. Almost got stopped out, but didn't. Now the market is turning back in my favor. And this also makes retail view this general area as an area of support. So if they get long, where are they going to place their stop loss? Below this low or this low? So that's just priming this low. And I know that when I see this and the market begins to turn away from it, there's eventually going to be some type of move like this, right? Okay, so this area had a lot of confluences. And first of all, if I start on the daily chart, I was studying this volume imbalance. We have a volume imbalance here that's been overlapped many times, but PD arrays do not go stale. They can be used over and over and over again. The algorithm will refer back to them. Although this one has been overlapped many, many times, so I'm not sure how sensitive this is, but I was able to frame some logic based off of it, and that allowed me to catch a good short before the 9:30 equities open. So I was studying this. Another important level that I noted was this daily buy-side imbalance. I noted the high of that. That's a discount array. And as you can see, that's where the low of day was formed. We literally have an institutional order flow entry drill on the daily buy-side imbalance. Barely taps into that and trades higher. And if you go to a lower time frame, that level, that same level, is also... Alright, I had a little interruption there. Dog started barking, but anyways, if I zoom out to this time frame, this is a 4 hour, you can also see that this is sell side liquidity. So going back to the 15 minute, I'm gonna just drop down to the 1 minute and just straight up frame the logic of this trade. So this is what I was seeing at this time frame, at this time period. So I actually did really good prior to the 9:30 equity open. I was able to read this price move higher to run this minor buy side liquidity. And I was also able to read this entire price leg lower down into the previous day low. I need to mark that on my chart because it's gone. Oh, never mind, it's right there. Okay. So this was actually my first observation right here. And the logic behind it was pretty simple. I see a breaker formation. We have a change in the state of delivery, and look at these large up close candles. Very large up close. A lot of large consecutive up close candles change in the state of delivery. We violate the open price of this consecutive series of down close candles. We leave multiple buy side imbalances that the market does not even reprice back down to. So that is very indicative of strength, and this tells me that the market is aggressively repricing higher to attack this minor buy side liquidity pool. And then what I see here on this imbalance is institutional order flow entry drill, where the market barely taps down into the upper quadrant of this buy side imbalance and begins to trade higher. We see it accumulate a bit, but look how it literally barely wicks into that. Barely, just barely. That's exactly what you want to see. That is institutional order flow entry drill. It accumulates a bit and then it begins distributing higher. And look how as we leave this range, look what we also leave more breakaway gaps. So that's more, that indicates more strength. That's exactly what you want to see. And if I go to a 5 minute, I believe this was an order block on the 5 minute time frame. Right here. Yeah. I think that's what I marked that level. I don't know. Yeah, it is. Okay. So it was also trading back down into the order block in the 5 minute time frame, and look how we're respecting that open price. Perfect. Exactly everything that I want to see. So I see this and I'm saying, okay, price is now going to attack the minor buy side liquidity above these highs. And then here's where I frame a short scenario. So as I outlined earlier, 15 minute time frame, I'm thinking price is drawing down to these relative equal lows and the previous day low. I see a change in the state of delivery, large sell side imbalance. So I mark out the consequent encroachment of that sell side imbalance. That is a key point of interest. The market could potentially trade up into. Reject that if it were to stay in the lower quadrant and not violate consequent encroachment of this imbalance, then that is a clear indication that we could possibly go revisit and disrupt these lows. So that was what I was looking for. And if I refer to the daily volume imbalance, look what we're trading, look what we're doing, how price is respecting the daily volume imbalance. So you can see that we literally touch consequent encroachment to the tick. You can see that the consequent encroachment is 61450. What is the high of this candle? 61450. So literally to the fucking tick. That is perfect. That's everything I need to see. Not only that, but this is the lower quadrant. This is half of the lower quadrant, so 0.25 of that daily volume imbalance. And if price cannot even reprice to consequent encroachment of the daily volume imbalance, what does that indicate? Weakness. So not only is it doing that, but it's also rejecting consequent encroachment of the 15-minute sell side imbalance, buy side inefficiency. And what is this? New day opening gap low. So it's showing me willingness to react off of and respect 3 different higher time frame PD arrays, or 3 pertinent PD arrays. We have the half of the lower quadrant of the daily volume imbalance. We have consequent encroachment of the 15-minute sell side imbalance, buy side inefficiency, and we have a new day opening gap low. Look how the bodies of the candles do not even close over any of these 3 levels. And that shows weakness in my eyes. I really didn't even have to have any of this shit on here. So I can just take that off. Look how much cleaner that is. And I can just see that the price rejects consequent encroachment in the new day opening gap low beautifully. And then what do I see here? Breaker formation, a change in the state of delivery. We have a stop run here. We run out minor buy side liquidity here. We have a change in the state of delivery. We have a rejection block, trades up, rejects the rejection block. But there's a change in the state of delivery. Reject the open price of that. We have a sell side imbalance right here. Notice how the bodies stay in the lower quadrant and they do not close above consequent encroachment. It's exactly what I want to see. This is a breaker as well. Do the bodies of the candles respect that breaker? Yeah. They wick outside of it. Coloring outside of the lines is permissible. You allow that to happen because it's simply referring to other PD arrays. We do not trade to consequent encroachment of this wick, so that indicates weakness. We do not trade to, well, we do trade to it, but we don't close over consequent encroachment of this wick as well, so that's also another sign of weakness. And then here's the more cleaner breaker formation, you could say. But we have this volume imbalance. And once we close below it, you know, it's kind of colors outside of the line of this, outside the lines. But what do we have here? We have a buy side imbalance, sell side inefficiency that is inverse, and look how it is respected once it is inverse. That is beautiful. Not only that, but look, we also have another rejection block. It comes, trades higher, rejects the rejection block perfectly, beautifully. Exactly what I want to see. So all these things coming together in one area after respecting these PD arrays, pertinent PD arrays on a higher time frame, that's very clear that the market wants lower prices. So that was what I was seeing here. And I record this as a short observation. And I'm targeting first partial here, these clean lows. And we got previous day low somewhere all the way down here. And it delivers for over 100 handles. So it was a crazy run before the bell even opened. And I was also studying this consolidation range because usually whatever side we run first when we form a range, usually when we have a range like this, whatever side we trade to first, we'll tap the liquidity on that side and then defer to the other side. So that's also what I was looking for. I was looking to see if price could trade higher, leave this range, and then see if I see a signature in price that indicates it wants to reach into these relative equal lows. And clearly I got all that here with the body of the candles respecting these two levels. Just remove the daily volume balance. I really didn't even need that, and I put a lot of noise on my chart. So get rid of that. What else do we see here? Here's a sell side imbalance, buy side inefficiency. This is a inverse fair value gap because it did not send price lower. This is not a reclaimed fair value gap because it did not send price lower. We just traded right through it. This is an inverse fair value gap. Look how we respect consequent encroachment once we trade back through it. Look at that. That's beautiful. That's perfect. So initially we are respecting it as an inverse fair value gap. Then this is exactly what you would want to see. You would want to see disrespect it. And then if this is a valid inverse fair value gap, you want to see it stay in the lower half, the lower quadrant. You do not want to see it trade back up to and above consequent encroachment. And if it trades to consequent encroachment, you want to see it reject it very fast. And it does exactly that. And we can also see, what else is there? Order block. I wonder if we close over this wick. Yeah, we do. So I knew that I was on the right side of the market the entire time. And I knew that the market was aggressively drawing towards those relative equal lows and also the previous day low like a black hole, because the entire time this order flow was clearly bearish. It was clearly heavy. Every up close candle was rejecting price. Every up close candle was holding down. So this is a repulsion block because we have an order block formed off of another order block. And this is a valid propulsion block because we don't close above the mean threshold of this order block. So it's exactly what I want to see. Valid propulsion block. And do we reject the open price of this order block? Yes. So the order flow was clearly bearish, clearly heavy. Especially after seeing this, and all of this move comes right after what? We inverse this fair value gap, or we disrespect the inverse fair value gap, trade back up into it, and beautifully reject consequent encroachment to the tick. And then price is heavy from there. And then we reject the propulsion block, and then we see speed, distance, and magnitude towards these relative equal lows because they don't want to let anybody pull their orders off that have a stop loss below this low. They want to go attack that, pool liquidity. And we attack it, we trade into this. We don't even see any form of retracement. This thing is just weak, it's just heavy, it just falls over, literally. Here's an imbalance. And we have all these PD arrays up in here. We have a sell side imbalance here. We have a volume imbalance. We have another sell side imbalance. And price is so heavy it can't even reprice to them. So that's exactly what I want to see. I want to see PD arrays fail. And then here we have another order block, and the entire time the order flow is doing this. We can't even reprice this sell side imbalance. And notice how we reject, not that, this inverse fair value gap, right? Once we cross through it, look what we do. We respect the lower quadrant, and that is a valid inverse fair value gap. That's exactly what you want to see. Trade lower, order block, trade back into it, hammer it, volume imbalance, refers back to it, and we just attack these lows. And this is a propulsion block, right? Because we have an order block formed off of another order block, and the mean threshold of this candle is closed above, so that's not a valid propulsion block. But anyways, I guess it's still an order block. This price respected, yeah. We have a sell side imbalance colored outside the lines a bit. Volume imbalance, inversed, trade back into it, respect it. Look at that. Relative equal lows, run them. Buy side imbalance, inversed, sell side imbalance, doesn't even reprice to it. Wick. Disrespected, consequent encroachment, retraded to, and open price of order block. Perfect, beautiful. So I guess this would be a propulsion block right here because we have an order block formed off an order block. Sell side imbalance, can't even reprice to it. More uplift candles, rejecting price. And we attack those lows. Sell side imbalance. Reject consequent encroachment, trade into the upper half, immediately repel lower, and then boom, we dive into that liquidity below the previous day low. So the entire time the order flow clearly bearish, narrative clearly bearish, and it's everything that I need to see. So those were those two observations. And then going into the 9:30 open, I really didn't know what to expect because if I'm being honest, I thought the high of the day was in the London session, thinking in terms of the daily power of 3. I thought the high day was in the London session. I thought the thing was just going to keep bleeding lower because I see this. Normally, recently I've kind of disregarded thinking in terms of daily profile and just thinking, where's the market smooth because that's where it's going. And that logic has been working. Now, if I held on to that logic and disregarded the daily profile in today's session, then I would have probably anticipated this move. But I thought the high day was already in. I thought there's no way that we go and revisit this high. Sure enough, what do? We go and revisit that high because it's smooth up there. Market wants to disrupt the liquidity above that high, and that's exactly what we do. I really didn't think we had the ability to do that. So trading in this entirely new way, I'm still new to this. It's kind of just, it's a complete paradigm shift on what the market can do within a daily range, because I used to be a very, very short-term scalper, scalping like 10 points or less on the S&P 500, which is absolutely nothing. I'd do that and be done before 10 a.m., literally. So I used to trade like complete shit and it didn't make any sense at all. I would stay 10:30 at the latest probably, which is 11:30 New York Eastern Standard Time. So I have no idea what, well, I do now. I'm well aware of what the market can do within a daily range now, but before that, I mean, this is just something that I'm just now opening my eyes up to. So this is all new stuff for me. I don't know I didn't think the market could do some shit like this, right? We have this huge manipulation move lower. This is the Judas swing. This is the fake move, the sucker play, and then boom, run out all of that buy side liquidity. So kind of just going to throw away the daily profile out the window and just think, okay, where's the market's move? Because that's where it's going. Where's the damage done? Because it's going to move away from that. But look, this entire way down, look at all the clean, smooth highs that we leave. So there is no damage done to any of these highs. All the damage is done down here. So going into the 9:30 open, I was confused because I thought the high of the day was in the London session. I thought for sure this thing was just going to keep bleeding lower. That's what I was thinking. Not the case. So initially I was looking for some manipulation move higher to go take out. I really don't even know. I was really lost post 930. Some run on buy side liquidity and then fade lower. I wanted to see initial manipulation move higher. And so something that I've learned recently is anticipating where is the market accumulating, where is smart money accumulating their positions. And you can clearly see, well, this is something that I've learned throughout my observations in today's session and yesterday's session as well, is where do I see most of the damage done? Where is it very clear? You can physically see it in the chart that there is damage done, the stops haven't ran. So initially, what do? We open at 930 and we trade higher. We run out and disrupt all these smooth highs, right? So yeah, we have some damage done there, but compare this stop run to this stop run. And look how much time it spends underneath these relative equal lows. So because it spends more time underneath these relative equal lows, what does that tell me? The market is accumulating long positions inside of this pool of sell-side liquidity. So smart money is a counterparty to all of the sell-side liquidity underneath these relative equal lows. And look how it's just spending time down there, offering opportunity for smart money to get long on this thing before it begins delivering higher. So what I learned from today's lecture in the 2024 mentorship and just studying how price has been delivering this week is spotting that accumulation. And that accumulation is going to be where you see more physical damage in the chart. It's going to spend more time down there, and that is where the accumulation takes place. So initially we trade higher, but not really a significant stop run, don't really do much. And then we trade lower. Look how much time we spend underneath this sell side liquidity pool. And we have a clear, clean breaker formation. So here you could say, yeah, sure, we have a breaker formation. But look down here. Down here it's very clean. It's very clear. And we tap into the buy side imbalance on a daily chart and a higher time frame sell side liquidity. So we have a breaker formation in that, a change in the state of delivery. This gap is meaningful, leaves it with excitement. Trade back over first presentation, touch to the tick, and then we trade higher. So I'm seeing all of this, and I don't know, I'm just kind of confused. But I'm going to compare this to also the previous day's session because it was literally the same thing. So where do we spend more time? What liquidity pool do we spend more time in? Because that's the algorithm offering opportunity for smart money to be the counterparty to that. And if we go to yesterday's session, Monday, it's the same thing. It's the same thing, just opposite, literally. So if we outline our liquidity, we have sell side here, buy side here, right? Where does the market spend more time? Does it spend more time in the buy side liquidity pool or the sell side liquidity pool? The buy side liquidity pool. And look at the real move today. So there you go. That shows real accumulation. The market is spending time there. And look what we have here. Clean, clear breaker formation. Oh, actually, this is not. This is a breaker formation right here, right? Here's the last down close candle. Boom. But compare that to this stop run right here. Very, very shallow. Very short. Doesn't spend any time down here at all. Doesn't spend any time down there at all. Now compare that to this. How long has this been up there? 11 minutes, right? And if refer back to today's session, it does the same thing. How much time does it spend in this pool? 10 minutes. How much time does it spend in this pool? Like 5, right? So I need to learn how to spot the accumulation. I also need to weigh in higher time frame PD arrays because those are very, very important to my analysis. I kind of disregarded the daily buy side imbalance high as a discount array and also that higher time frame sell side liquidity. I had it on my chart and I saw that the market tapped into it, but I was just, well, actually, I don't even know if I saw the market tap into it because I think I was looking for something to get me to go lower. And then that just didn't happen. And then at this point, when the market started accumulating here in this breaker block right here, we run the buy side liquidity above this high, and the market is accumulating more long positions in this area. All these shorts stopped out. So more accumulation. buy side imbalance. If we look left, inverse for value gap, and we trade higher. So initially in this accumulation range, I wanted to see something drop lower first, run out these relative equal lows. That's why I have this marked, and then trade higher, and then go run all this buy side. But then I never got that. So a huge character flaw that I have is when I expect price to do something, when I hold rigid expectations in price and it doesn't do it, it doesn't deliver to my expectations, I get very frustrated and I kind of just give up on reading price. And that's exactly what I did today. Because after the market did this, I said, whatever. I don't know what it's doing. I kind of just gave up. And that was basically it for the session. And I just watched it till here, but I just kind of, dozed off, not really doing anything, not really paying attention. Notice that this was similar to this, and this was similar to this, this was similar to that. So I thought, okay, maybe it's just going to do the same thing, could do this the entire session, I don't know. And if I'm being honest with myself, I was looking for something to get short to attack these relative equal lows after we tapped into this, because I thought the high of the day in the London session was already in, but not the case. And that was actually the fake move. And the market was capable of reaching back into the London high. So that was a paradigm shift right there. See, I marked this change in the state of delivery because I was looking for some short setup, but I noticed that we never had the ability to inverse this buy side imbalance, and we respect consequent encroachment of that, so I didn't have any trade idea there at all. So I learned a big lesson on what validates a trade idea and what invalidates a trade idea. See, if I need to find a pertinent imbalance on the left side of the curve, and if price is unable to invert that and disrespect it, then I don't have a trade idea. I need to wait until that happens. And if it doesn't happen, then I'm sidelined. I don't have anything. So, I mean, you could tell I was looking to short the market again up here, right? But we never inversed this buy side imbalance, so I never had a trade idea. So knowing that kept me out of some stupid trades trying to fade this thing, because we just simply respected the buy side imbalance and traded higher. And I was looking for the same thing here, and it wasn't until it wasn't until we inverted this, that is when we saw the valid trade idea. We trade back up to this balanced price range, reject that, fail to get to consequent encroachment of this discount wick or this inversion wick, and then we roll over. So there you go. So huge character flaw that I need to work on is I need to stop holding rigid expectations on what price can do, because I think it's going to do exactly this, and if it doesn't do that, then, or when it doesn't do that, then I get frustrated and I just give up on reading price action. So that's something that I have to work on. I also need a paradigm shift to know that the daily range is capable of doing some crazy shit, especially in the current conditions that we have with the global climate, everything going on in the Middle East. The volatility is very, very high, and it can do a 200 handle run just like that. So got to be mindful of that volatility, adjust and adapt to it, and know that the daily range is pretty wild at this point in time. So that's it for today. Until next time, goodbye.